Moody ratings agency has cut Saudi Arabia banks. Why? Primarily due to the low oil prices. Now, I just want you to keep things in mind. They're never right. As a matter of fact, they still had Lehman Brothers A-rated bonds the day before they went bankrupt. So just to give you an indication. I mean, they're always after the fact. But nonetheless, they say that they're concerned. The system, the banking system, there are some concerns. Low oil prices have basically just sucked dry the government's ability to spend heavily on the home front, domestically. Now, remember, this entire economy in Saudi Arabia is driven on oil and government. The government is the one that drives the economy. So it's a problem because they need to put the brakes on economic growth there at home as a result of low oil prices and their stubbornness. Back in April of last year, had they slowed production down a little bit of oil, they wouldn't be in this mess this morning. They painted themselves in the corner. And now they're looking at all because they wanted to preserve market share when there was no demand around the world to soak up any market share from anybody else. I'm convinced it was a bad calculation, and I'm convinced the bad calculation on their part is going to come home to roost. UK stocks had a little bit of boost from commodity producers. Commodity prices are up a little bit. We're primarily seeing some of the miners, some of the hard commodities, some of the metals being up. As a matter of fact, one of them on my buy list this morning. Interesting. There is talk about Deutsche Börse buying or doing a stock merger deal with the UK Stock Exchange, the London Stock Exchange. This would be creating the largest securities market operator worth more than $30 billion. That would be the London Stock Exchange. Interesting move. Some more information we're going to talk about as soon as we get back. Couldn't get it in.
Oh, look at this sweet face.